It's Thursday, May 20th. This is The Street Live. I'm Katherine Ross, and I'm joined by Jim Cramer. Jim, we do have the markets positive for now, so what are you watching?
Well, I'll tell you, I'm actually looking at what is I would describe as being a return to normal. We've got semiconductor companies that are doing well, like a Broadcom doing a deal with Google that we read about from a brokerage house, and the stock jumps 18. That's right. AMD follows up with its strength yesterday on an incredible buyback by Lisa Su, $4 billion. I'm seeing Apple rally on a very good piece by the UBS Evidence Lab that there's tremendous demand for the iPhone. So I'm seeing tech with some good news, and it's actually working. It's moving the stocks, and I think that that's a very healthy sign.
So last night on Mad Money, Jim, you said that the market is currently made up of two camps, with one being the meme stocks and crypto. Do you think that this change in the market is permanent?
Well, no, I think that the first track, the track that is meme, crypto, Woodstock, is in its I don't want to say it's in a death rattle, not at all, but it's in its waning phase, and the waning phase could last for a long time, Catherine. But the stocks that are waxing are fundamentally strong, and I like the idea that we're in a market where good news translates again into higher stock prices after a period where the only thing that mattered was GameStop and AMC. And the people who love GameStop, they should have listened very closely to what Strauss Zelnick had to say. Strauss, CEO of Take-Two, which had an excellent quarter, by the way, is without a doubt committed to direct distribution. In other words, comes right down to digital download. And a digital download means that GameStop has nothing to do. There is no business, so to speak, other than their ancillary businesses. So we all wait what Ryan Cohen's going to do, because right now it's not enough to just continue the way GameStop is.
Well, let's talk about crypto then, Jim, because while the market is making a bit of a comeback, we do have crypto at nearly 42,000. It's at 41,800 currently. So you tweeted this morning that Bitcoin needs regulation, and we've talked about this a lot. The regulation is essential to what happened yesterday. So obviously bureaucracy takes time, and we're just seeing crypto get recognized by the IRS. But if you worked at the SEC, Jim, I have to ask, because I'm very curious, what would your first approach be to crypto?
Well, first, I know the Coinbase wants regulation because they want to prove that they're the honest broker. I want regulation because for my position, I want to be able to make it so that it can't lose so much so quickly. It's a very easy thing to do. All you have to do is say, okay, look, we're not going to let margin buy. No margin buying for Bitcoin. You have to do it cash because it is cash. If you think it's cash, then you should buy it for cash, but not borrow to buy it. So if they got rid of the leverage, that'd be fine.
Your mad dash this morning, Jim, was Ralph Lauren. And you say that it's a buy in your eyes, not only because we're going to be dressing better, but I also think that there's an argument to be made here that it could be a buy because younger people, millennials, Gen Zers, they're done with the fast fashion kind of thing. They want clothing that lasts a long time, that's more climate friendly, eco friendly. So with this younger mindset coming in, do you think that this strengthens a bullish case on Ralph Lauren?
Yeah, it does. Now, look, the stock is run. It's kind of like Kohl's. Kohl's ran, and people were just kind of saying, okay, well, listen, it was a good quarter, so what? I mean, that's when you buy it. When Ralph Lauren's down 11 is when you buy, not when you sell. Now, let's be careful here. When I say it's down 11 on 1.7 million shares, that's some very large institutions trying to get out at any price. Now, 1.7 million shares is not enough. They probably have a lot more to sell. So there's probably going to be an even better moment than at this moment down 11 to buy some. I would buy some now. If you're watching, I would buy some now. And then I wait till the end of the day, particularly around 3:30, quarter four, when brokers might try to knock it down. That's been time honored. They've been doing it endlessly.
Another stock that is seeing a bit of pressure in morning trading, at least, is PETCO. Jim, you and I have talked extensively about PETCO versus CHEWY, but after seeing earnings and talking to CEO Ron Coughlin, I want to know what your approach is to this stock.
Well, look, I mean, people love CHEWY. And remember why they think CHEWY's good. It's an annuity stream. People sign up for CHEWY until stuff is delivered and delivered and delivered, and versus the one-off nature of PETCO. I happen to like the fact that Petco is going all in on healthcare. That's what's needed. Healthcare, you spend any amount of money on your pets. So I mean that's where it's going, but it's just not as exciting as what CHEWY has. Now remember, the co-founder of CHEWY is none other than the redoubtable Ryan Cohen, who we know must have a plan because otherwise the regular digital download business is crushing it.
Let's continue on this earnings train because I want to ask you about your interview with Chuck Robbins, CEO of Cisco on Mad Money last night. So what stood out to me personally, Jim, was Robbins discussing how companies are currently investing in a return to office and the hybrid work environment. What's your approach to the stock after earnings and speaking to Robbins?
Well, the stock should have been up, not down. Cisco is an order play. The orders were spectacular, best I've seen in ages. There was no doubt about it that Chuck was the most upbeat I've heard him in years. There was this short-term concern where they had to take a hit on earnings because of the supply chain. But they've taken the hit. They want to do that in part because they want their clients to be happy. A good call there. So the market is coming to its senses. Sometimes the market is very, very wrong, particularly in this period where the market seems to be focused on GameStop and AMC and Dogecoin. But now it's starting to come to its senses. Cisco is trading the way it should.
Real money, Action Alerts Plus stock that I want to bring up, Jim, is AMD because they announced a $4 billion stock buyback. Now, I want to talk about the stock itself in our Action Alerts Plus daily rundown show, but I do want to ask you, when we're talking about stock buybacks, can you explain to investors who are younger, who maybe don't know what that totally means, what that means for a company and why investors should like it?
AMD, so let's just do the math here. Okay. So Advanced Micro Devices, it has a market cap of $93 billion. Okay. It has outstanding 1.2 billion shares. If you shrink that, what's remaining of the actual profits, you've got a smaller denominator trading and selling into the you divide the denominator into the numerator, and you discover that the denominator is smaller, which means there's more earnings that are left. Now you could say it's sleight of hand, but it doesn't matter. When you reduce the share count, you crunch it. So this is very good news, and the stock is reacting accordingly. I expect it to be up more today, though. I still think it will.
When a stock that you like, Jim, announces a big buyback like this, is this a signal for you to be more bullish on it? Would you look for maybe an entry to the stock or to add to the position?
Well, it depends if I think the industry is any good. I'm very industry driven. If it's a buyback in the among the meme stocks, I don't really care. If it's let's say a drug stock which has very good cash flow, then I think I'm kind of really interested. I don't want it in a tech company because I want them to grow. I want all the money toward growth, not toward buying back.
So lastly, I do want to mention Ford. Again, this is a stock that we're going to cover more in our Action Alerts Plus Daily Rundown show, but I'd be remiss if we didn't talk about their unveiling of the electric F-150 last night. Now, with this 300-mile range and a price tag of just under $40,000 on CNBC this morning, you were comparing it to the Cybertruck, and I want to do that again here. What do you think that this is going to be a firm competitor to this Tesla Cybertruck?
First, it's very nice. I retweeted that Elon Musk tweeted that he welcomed Ford to the EV space. I think this is going to be an EV. I was talking back and forth with my writing partner, Matt Horwing. This is going to be EV. We don't know who's going to sell it to. But that's positive, not negative. I think there are plenty of people who say, you know what? I want to get one of these because they're environmentally friendly. They have a lot of space to be able to for cargo, including the boot in front, and they have 200 to 300 mile range. That may not be enough for small to medium sized business. I think this is going to have a whole new set of buyers who always felt that they would love a pickup, but couldn't pull the trigger. I think they'll pull the trigger now because it's EV.
Do you think that Lisa's going to be interested in this car?
She wants the Super Duty. She's a Super Duty person. And right now the Super Duties are run on diesel. So the 2008 doing well. But yeah, without a Super Duty, she's not there. She feels that you need bigger, and the 150 is not big enough.
Hey, I come from Texas. You're speaking my language there. With that, Jim, let's head on over to our Action Alerts Plus Daily Rundown show, where we will be talking, as I said, more about Ford and AMD and a couple of other stocks that I want to get Jim's take on. So come join us over there. I'm Katherine Ross, and we'll see you tomorrow.